It's a pretty relatable observation. You pull up to the gas station or you open your utility bill at the end of the month, and prices are just surging.
Oh, absolutely. Everyone feels it.
Right, and you check the news, and they tell you, well, it's because of all the chaos in the Middle East, geopolitical
Yeah, probably
tensions.
is the headline.
But here's the bizarre part. Did you know that for 2026, analysts actually projected a massive, undeniable oversupply of global oil? I mean, we were essentially supposed to be swimming in this stuff.
Yeah, the data is actually wild when you look at it.
The oil is flowing, the physical supply hasn't collapsed at all, yet prices are skyrocketing. So if the market is drowning in oil, what exactly is it reacting to? Welcome to today's deep dive.
Glad to be here for this one. It's a massive puzzle.
It really is. Today, we are unpacking a fascinating stack of sources. We've got Japanese think tank economic forecasts, some deep maritime security analyses, and this cutting-edge market theory framework. We're going to solve this puzzle of why prices move so dramatically when supply hasn't stopped.
And in doing that, we'll uncover a sort of hidden structure running our world.
Exactly, the concept of civilization choke points. But before we get into the weeds, I do want to set the tone for the listener. Our sources today touch on some highly charged global conflicts.
Right. Very sensitive stuff.
Yeah, so I want to be clear. We aren't taking any political sides here, and we certainly aren't giving investment advice.
Definitely not.
We are just observing, we're analyzing the raw strategic and economic realities playing out on the world stage just based on the research.
Which is really the best way to look at it. You have to maintain that calm, analytical distance to actually see the underlying mechanics.
So true. Surface level events can be so blinding. So let's jump straight into that paradox of the pump. The immediate context from our sources centers on late February 2026.
Right.
Following the U.S. and Israeli strikes on Iran, Iran retaliated, which led to what analysts called a quasi-blockade of the Strait of Hormuz.
A huge deal in the energy sector.
Massive. Almost immediately, WTI crude oil prices spiked past $100 a barrel. And you had warnings that it could easily hit 120.
Which, honestly, from a purely historical perspective, is a totally predictable reaction. People panic.
They panic, yeah. But the data tells a completely different story. The Institute of Energy Economics, Japan, the IEJ, projected a global oversupply of 2.3 million barrels per day for 2026.
That is a lot of excess oil.
Right. And furthermore, the International Energy Agency agreed to this record-breaking emergency release. 400 million barrels from global reserves.
Just flooding the market.
Literally. So I have to push back on the market logic here. If the market is drowning in oil and the physical liquid hasn't actually been cut off, why the panic?
Well, it's because we're looking at the wrong metric entirely.
Okay, what do you mean?
The market isn't reacting to a lack of liquid. It's reacting to the fragility of the passage.
The passage itself.
Yes. We spend so much time looking at the volume of a resource, counting the barrels, that we forget to look at the physical path it takes to reach us.
Oh, I see. So this brings us to that concept from the research, the anatomy of a choke point.
Exactly. A civilization choke point is a strategic maritime or logistical passage where massive global flows are just forced to concentrate.
Like the Strait of Hormuz.
The prime example. Rough estimates put about 20% of the world's total oil consumption through there.
20%, just through that one little gap.
Yep, and 20% of global LNG trade, too. Liquid natural gas, all passing through this one narrow stretch of water.
I was thinking about an analogy for this earlier. It's like imagine a massive sports stadium, right? Holding 80,000 people.
Okay, yeah.
But there is only one narrow exit door for the entire stadium.
Oh, that's a nightmare scenario.
Exactly. Even if there's no fire, even if everyone is fine, just a rumor, just the idea that someone might lock that one door is enough to cause total panic.
That is a perfect way to visualize it. Because the panic is basically hard-coded into the geography of the stadium.
Right. But, okay, let me play devil's advocate for the listener here. Why can't they just bypass the door? If the Strait of Hormuz is such a known liability, why don't they just use pipelines to go around it?
It's a logical question. But the Middle East Institute of Japan data, the MEIJ, they actually run the hard math on this. And the math completely shuts that argument down.
Really? How so?
Well, Saudi Arabia and the UAE do have alternative pipelines. They try to bypass it.
Yep.
But combined, the absolute maximum capacity of those alternative routes is around 6.5 to maybe 8.7 million barrels per day,
Oh, wow. And how much normally goes through Hormuz?
over 14 million barrels a day.
Oh, I see. So it's not even close.
Not even close. You physically cannot force 14 million barrels of liquid through infrastructure designed to handle 8. The engineering falls drastically short.
So bypassing the choke point is literally impossible right now.
Exactly. Which brings us to a really profound concept from the source material. It's called the ECP-9 framework.
Right, the new math of civilization. This was fascinating to me.
It really shifts how you view the economy. The ECP-9 framework argues that we're undergoing a fundamental structural shift. The old textbook model, Econ 101, is demand dictates supply, which dictates price.
Supply goes up, price goes down, simple.
Right. But the new model, the one we actually live in today, is demand interacts with choke point risk, and that dictates the price.
So the market isn't pricing the oil itself anymore.
No. In the 20th century, we had a buffer. Supply capacity far exceeded demand. We had excess slack. If one route closed, 3 others could surge production.
But today,
That slack is entirely gone. We hyper-optimized everything for efficiency. So the ECP-9 framework says we are living in a civilization without margin.
a civilization without margin. That is a heavy phrase.
It means the system runs at 100% capacity with 0 room for error. So the modern price of a commodity isn't just extraction costs. It's essentially physical supply plus security plus logistics risk.
So let me clarify what this means for you, the listener. The price you pay at the pump or at the grocery store, it isn't just the cost of the resource anymore.
No.
You are paying a civilization risk price? It's like a premium for the instability of the world's infrastructure.
That's a great way to put it. You're subsidizing the fragility of these choke points.
Which leads to a really logical but kind of uncomfortable follow-up question. If passages dictate the price, who benefits from controlling or threatening these passages?
Yeah. The weaponization of the passageways. This is where the moo financial analysis comes in, looking at U.S. energy strategy.
This part really blew my mind.
Because the U.S. has a very unique dual position. They are the world's largest consumer of oil, but thanks to the shale revolution, they're also the largest producer.
Which means they have conflicting interests.
Exactly. The U.S. doesn't actually want prices too low. If oil drops below 40 or 50 bucks a barrel, U.S. shale companies go bankrupt because fracking is super expensive compared to traditional drilling.
Right, but they also don't want it too high.
Right, because if it hits $120, fuel becomes too expensive and it causes a global recession.
Which destroys demand and hurts the U.S. anyway.
Yes. So their ideal sweet spot is roughly $65 to $85 a barrel.
The Goldilocks zone.
Exactly.
Yeah.
But here's the trick. If there is a massive oversupply, like the 2.3 million barrels we talked about, the natural market force would tank the price and crush U.S. shale.
Right, because there's too much supply.
So to maintain that sweet spot, the U.S. actually benefits from a certain amount of global tension, a geopolitical risk premium.
Wow. So they need the market to be nervous enough to keep prices elevated without actually stopping the physical flow of oil.
You manage the risk structure. As long as the choke point is threatened but not closed, the domestic industry thrives.
A manageable amount of fear is highly profitable. That is wild.
It fundamentally changes how you view diplomacy.
It really does. But, the research doesn't just stop at geographic straits. We also shift from geography to corporate logistics.
Yes, the Japanese Ministry of Defense analysis. This takes it to a whole new level.
They looked at China's strategy with Costco, right, the massive shipping giant.
One of the largest commercial container shipping companies on Earth, moving a huge percentage of our standard consumer goods.
Electronics, clothes, all of it.
But the analysis shows that it's not just about moving cargo. It's a doctrine of military-civil fusion.
Okay, break that down for me because it sounds like a buzzword. What does military-civil fusion actually mean for a cargo ship?
Under Chinese law, these commercial container ships are integrated into the People's Liberation Army's logistics network.
Wait, legally integrated?
Yes. They function as a strategic projection support force, meaning a civilian supply chain, which has massive vessels, global port access, real-time tracking, can be requisitioned to move troops or heavy equipment.
So they don't even need obvious Navy ships to move military assets.
Exactly. And the sources even detail reports suggesting commercial ships could be retrofitted to launch cruise missiles directly from standard shipping containers.
That is terrifying. Just the idea that a missile system could be camouflaged as a standard 20-foot cargo container sitting next to thousands of identical boxes.
The transport mechanism itself is weaponized. It blurs the line between civilian trade and military threat. It creates the ultimate logistical choke point.
And what's really shocking is how blind we are to this, like how vulnerable nations are. The sources highlight that cyber attack in July 2023.
The port of Nagoya.
Yeah, it handles the largest trade value in Japan, right? Heavily supports industries like Toyota.
And it was completely paralyzed for days. Not by a physical blockade, but by a ransomware attack.
Just a few lines of code. It hit their terminal operating system, the digital brain telling the automated cranes what to pick up.
When the brain froze, the physical cranes froze. Tens of thousands of containers just sat there.
Supply chains ground to a halt. But here's the craziest part to me. At the time of the hack, under certain Japanese security laws, ports weren't even classified as critical infrastructure.
It's true. Governments were completely asleep at the wheel. We spent decades assuming logistics networks were just neutral, guaranteed marketplaces.
We protected airlines and railways, but totally forgot about the maritime ports handling all our trade.
And when you assume a system is guaranteed, you fail to secure it.
Wow. Okay, so I want to pivot here because I can hear a listener right now thinking, okay, this is a fascinating breakdown of legacy industries, oil, container ships, but my life is digital. I drive an EV. We are moving to an AI-driven world.
Right. The post-fossil fuel dream.
Yeah. Won't technology just free us from these physical geographic choke points?
It's a very intuitive assumption. We're conditioned to think of the cloud as this ethereal thing outside of physical reality.
Exactly.
But the expert revelation here is the exact opposite. The AI civilization actually intensifies choke points.
Really? It makes it worse.
It just changes what the bottlenecks are. Think about the physical footprint of artificial intelligence. An advanced AI data center running tens of thousands of GPUs needs immense power.
Right, they consume massive amounts of electricity.
City-level powering for a single facility. So the local power grid is your first new choke point.
Okay, that makes sense.
But then there's the thermal management. To keep those servers from melting, they use evaporative cooling systems. These require millions of gallons of highly purified water.
Which is a huge issue because a lot of these data centers are built in dry regions where land is cheap.
Exactly. So suddenly, local municipal water rights become a severe bottleneck for the most advanced algorithms in human history.
That is deeply ironic. We need physical water to run digital AI.
And it goes deeper into the hardware. Think about the green transition. EVs, AI infrastructure, grid upgrades, they are all entirely dependent on copper.
Because everything that transmits electricity needs copper wire.
Right. But here's the constraint. From discovery to extracting usable ore, it takes 10 to 20 years just to develop a new copper mine.
10 to 20 years just to open the mine.
Software can update overnight, but physical reality, the geology, takes decades.
So we aren't escaping physical reality at all.
Not even close. We're just replacing the Strait of Hormuz with a copper mine in the Andes, or a semiconductor fab in Taiwan. The future economy will increasingly behave exactly like the oil market.
A highly volatile, choke point-driven system.
Precisely.
Man, that is a profound way to look at it. Okay, let's summarize the journey we've been on today. We started with the puzzle of 2026 rising gas prices amid a massive oil glut.
The paradox of the pump.
Right. And we realized that markets no longer price supply levels. They price systemic fragility and civilization bottlenecks. We went from geographic straits to corporate shipping fleets to the physical constraints of the AI era.
It's a completely new way to observe the world.
So how does the listener apply this? How do they use this lens going forward?
Well, the next time you read the news about a sudden price spike or a geopolitical crisis, don't just ask, are we running out of this resource?
Because we usually aren't.
Right. Instead, ask yourself, where is the choke point and who is squeezing it? Look for the structural bottleneck. That's where the real power resides.
Where is the choke point and who is squeezing it? I love that. But I want to leave you, the listener, with one final, slightly more provocative thought to mull over.
Oh, I like where this is going.
We've spent this entire deep dive analyzing physical choke points, right? Maritime straits, container ports, water reservoirs, copper mines.
The tangible stuff.
Exactly, the hard assets. But if our entire global economy is currently pricing in the extreme fragility of physical choke points, what happens to our world when the ultimate choke point becomes something entirely invisible.
Invisible.
Yeah. What happens when the most critical bottleneck isn't a shipping lane or a metal deposit, but the proprietary black box algorithms routing the very logistic systems keeping civilization alive?
Oh, wow.
If an opaque AI system eventually decides the routing, the pricing, and the priority of global survival, who is guarding that choke point? Just something to think about the next time you pull up to the pump.